What's up, y'all? Hope you guys had an amazing Christmas. So let's get into one of the plays that made our week for the Discord fam. So some background info on XL is that it is a SPAC merger play. It previously ran up to its all-time highs at around 21. We'll draw a little resistance level there the day after the merger was confirmed. So it was a highly hyped stock from YouTubers and a bunch of people pumping it. And there's like overall hype as it is involved with the electric vehicle industry. And SPACs are super hyped right now. So there's tons of volume coming in and lots of eyes on it. So the day after the merger was confirmed, hype went up and then it started selling off as the day progressed. So that was a classic sell the news behavior where everyone sold it after the event happened. So this is usually an overreaction where it sells off way too far down. So for this, we're looking for the bounce play up where after it consolidates at a bottom, we then swoop it up, go long, then it'll ride up. So this case was very unusual too, which will be explained in a bit. You can also notice it was very unusual as it sold off very far from the peak right here. Alright, so we'll imagine it in real time. Let's say you had it on your watch list post-merger, or it hit one of your scanners after it sold off and hit short sale restriction. So that's when, for people who aren't familiar, so yesterday's closed around 19.46. If it gaps down below 10% of that, it enters a short sale restriction, which you can only short on an uptick. So you can't short as it goes down here. You can only short after it goes up, then you short. So this makes it a little bit more harder for short selling to occur, and it also increases the likelihood of a short squeeze, which everything will gap up bigger. So this is a very bullish catalyst. So that happens the day of when it's triggered. So the same day, that'd be Tuesday. It also happens the day after too, which is Wednesday. Okay. So here's a part where experience comes to play. Let's say it hits short sale restriction. We'll draw out some resistances, some in pre-market. Say a little bit right here. Nice and patient. Okay. Right here. And one more right here. You can take out these, whatever you prefer. But something like that, okay? So here's the part where experience comes into play. So this is a very fundamentally backed company with lots of big players supporting it. So usually SPAC sells off post-merger, but not that much, maybe like 5, 6, 7%. That happened for HCAC, which became GOEV. That's like a normal sell-off. However, this one abnormally sells off. It hits the 10% range, around like 17.4 of the short sale restriction, because the previous day was 19.4 minus 1.94. That'll be around 17.35 or something. So then it hits that range and then it just stays there. And then the previous day's level 2, there was a huge support around the 17.3 area. So this is getting kind of funky, right? So why would a fundamentally backed company all of a sudden sell to a random perfect point around 17.3 just in time for its official change, ticker change announcement tomorrow? And during after hours that day, lots of brokers will restrict it from trading in after hours. So try to imagine what would you do if you were that company or someone else that was supporting the company that wants it to grow? So what you would do is that in after hours or the next day in pre-market or something, when people are more restricted to get into it, you would do probably a price upgrade, any announcements, etc. So that would push the stock up, as we'll do the classic low supply, high demand. More people want to get into it, however, there's not as much. That'll cause a FOMO run up the next day. So there are a lot of people shorting today too. This causes these shorts to be trapped at the bottom, and this will also cause, or it'll increase the gap up tomorrow when there's the short squeeze. So this is why it's very important to consider all the players in the game at the same time. You got your different institutions, you got your pro traders, you got the masses, so people who don't research, you got the prop firms, you got foreign players, the analysts, etc. Really consider everyone what they want at the same time. And this is done by listening closely to the market to try to understand it, as opposed to trying to figure out all these technical indicators, because they're just an effect, they're a side effect of the different players and what they think and their motivations of what they truly want. Okay, so let's keep going. We have a little 3-minute chart. Just imagine you picked up your scanner, keeps going, gets up below or above the 5 and 20 SMA line. If you're riskier, you can add in here, or you can wait for it to gap up above the previous support, gaps up above. So this is a slightly more safe entry, so you can scale in here. So if you're doing 60k, if you're risking 20k right here, then another 20k right here. So we keep it going. We'll see if it breaks the old resistance right here. Okay, it doesn't. Okay, keep it going. So we'll set a notification right here to see if it breaks it. Keep it going. We'll also set a notification right here if it breaks the support too. The previous one too, they match. So it could be a cup and handle, or could reject a setting triangle, whatever, we'll see. Okay, almost hits it, but it doesn't. Let's see if this support holds. Okay, it doesn't hold, but it bounces right up, right after. So we keep it going. Okay, then now it sells off even further. Little double top pattern here. Okay, keep it going. But it could also form the ABCD pattern where top here, bottom here, consolidates, breaks through. So we'll keep the notifications the same, keep it going. Okay, then around right here, I would fully enter the position for an overnight swing, as it's already in short sale restriction. So there's a higher chance at which it'll gap up tomorrow, along with the other previous catalysts, like the high likelihood of bullish catalyst tomorrow, since in the after hours trading will be restricted to. So enter here. So if it's 60k for your full position, you fully enter the rest. So back here, if you're risky 20k, receiver 20k, go down here 20k, or 40k if you're more safer here. So it keeps going, and then in after hours, lo and behold, turns out there's a press conference with the CEO tomorrow morning that all of a sudden got announced, and then it turns out the company will also showcase their electric vehicles to ring the NASDAQ opening bell, which is a huge PR event. So we were able to kind of predict it by reading the flow of the information by the different players in the market during the day hours. So some people might think, oh, this is lucky, this is just super random, like fundamentals only matter or technicals only matter. But if you don't really consider the psychology of the different players in the market and what they want, their motivators, their past patterns, their patterns right now, the patterns in the future, then that's a big gap that you're leaving for greater reward potential. So, of course, some people specialize in different areas. Some people are really good at reading fundamentals and determining the actual value of the company, so that'll be better long term. Some people are really good at reading technical patterns, the different supports, resistances, etc. So for shorter time frames and longer. Other people are great at reading the psychological flow of the different players. So that's my edge. And if you suck at other areas, try to outsource them. So let's say you suck at fundamentals, sign up for a newsletter from someone that's really good at that so they can break it down for you in easier terms. If you suck at technicals, have a subscription to people who are really good at that, who have their own unique scanners so they can provide you with tickers for momentum day trades in real time, or they can give you analytical price patterns at key levels too. So really make it a social game and outsource whatever you suck at, hone in whatever you're good at, and contribute to the community, whatever you're in, and so on. So let's switch it over to the next day. After the hour happens, boom, news catalyst, people go in. Let's keep it going to the next day. Then we'll switch to a little shorter time frame and opening. Oh, a little too far. Okay. JK, a little too far. Let's bring it back. There she is. Okay. So this is 4 a.m. right here. Show a little vertical line. 4 a.m. right here. Gaps up. More people get into the hype. Gaps up even more. So let's imagine this is in real time. So the CEO interview was at 7 a.m., right? So if you don't have weekends, you can wait until then, as the CEO usually pumps up the stock, and you can play the pre-hype before that and the post-hype after if they say good news. So it keeps capping up pre-market. We'll see what happens in opening. Okay, green. Gaps up, hits a psychological resistance level, so you could scale out a little bit right there too, like 1/3. So if you have a 60k, scale out 20k. Goes up here, sells off big time right here, hits the previous supports. So if you want it to be safe, you could scale out a little bit right here, or you could also utilize what experience came into. You can wait a little bit if it gaps down even further, as people usually do stop loss trades where they sell off a bunch to cause panic and then it'll quickly bounce up. So keep it going. Okay, starts gapping up. Keep it going. Okay, keeps on gapping up. So this start drawing out the trend lines. See where it goes. So let's say we scale out 1/3 here to be safe. Keep it going. Keep it going. Oh, wow, okay, it starts gapping up like crazy. That's insane. Okay, it gets around 21.4. Starts going down a little bit. So you start selling off right here. You can scale out another 1/3 as it goes below the 5 and 20 day SMA line. Goes down below. Let's see if it goes down goes up even more. So let's say you have like 20k left. Oh, then it breaks this. So you could scale out if you have the option. As I broke the trend lines, I'll take this out. But we'll see. Let's imagine you keep it running, keeps going up. Okay, so now we'll adjust. There's a new trend line right here. Smash right here. And it breaks again, so you could scale out another of your full position right here as it breaks the trend lines upward. So lock in profits for any abnormal gap ups. Keeps going. Okay, could scale out again right here. That sells off right here, but we'll see if it establishes support and bounces up or not. Okay, let's keep going. Okay, we'll see if it bounces up. Nope, doesn't. It consolidates. Maybe it'll form like a bear flag, goes up here, it goes up. Okay, it kind of does. Okay, keep it running, keep it running. Forms a new resistance, a little lower one right here. Keep it going. Then this is another optional scale out too, where it forms kind of like a mini double top right here. Goes down right here. Then it gaps down below that previous local support right here, in which case I would personally fully exit. If you're riskier, you could wait a little bit more. Let's keep it going, let's keep it going. Okay, we'll see if it gaps up even more. And it forms a little head and shoulders, right, left, shoulder, head, right shoulder. Gaps down below all three SMA lines, the 5 to 20 to 40 day SMA line. So in this case, you could fully exit right here, or you can play the continuation too, etc. So that was a little lengthy breakdown, but hopefully that helps. So talk to you next time.